Hi, good afternoon. Welcome to the marketplace. Coming up, Ghana's economy grows by 5.7% in 2024, but fourth quarter sees sharp drop to 3.6%.
Culminating in the economy growing by 5.7% in the year 2024. From a non-oil perspective, the economy grew by 6.0% in the year 2024.
Agri sector set for major boost in 2025 budget, whilst interest payments expected to surge due to debt servicing resumption.
See an increase in debt servicing because Ghana is resuming the payment of debt, because in the past 2 years, the government of Ghana was not servicing some debt.
As interest rates plummet to 17% as demand for treasury bills continue to rise. My name is Darryl Kwao. Thanks for being with us. Details coming up. All right, thanks for staying with us, everyone. First up, Ghana's economy grew by 5.7% in 2024, marking an increase from a revised 3.1% growth seen in 2023, according to provisional figures released by the Ghana Statistical Service. However, the economic growth rate for the fourth quarter of 2024 plummeted to 3.6% from 7.2% in the third quarter. Government statistician Professor Samuel Kwabena named attributes a fall in the growth rate of the fourth quarter to contraction in various sectors, including mining and quarrying sector.
We look at GDP and GNI per capita, given the 1 trillion Ghana cedis that was recorded in the year 2024, and with our current population projection of about 33 million persons in Ghana, GDP per capita in the year 2024 was 35,632, and GNI per capita was 34,344. So this is the gross domestic product per person, given our population projections figures for 2024. Highlights of Q4 GDP estimates. In the last quarter of 2024, in current terms, GDP oil estimate was 331 billion Ghana cedis, and in constant terms was 53 billion Ghana cedis relative to 51 billion Ghana cedis that was recorded for the same time in 2023. From a non-oil perspective, the current GDP value for the last quarter of 2024 stood at 324 billion Ghana cedis, and in constant terms, having adjusted for the effect of price changes, GDP in the last quarter of 2024 stood at 50 billion Ghana cedis. From a GDP at basic prices perspective, we continue to see the dominance of the services sector, with the services sector contributing 49.2% of the GDP estimate in the last quarter of 2024. This was followed by the industry sector, 31.9%, and the agricultural sector, 19.1%. Highlights of annual GDP estimates. For the period January to December 2024, Ghana's economy was 1.2 trillion Ghana cedis, specifically 1,176 billion Ghana cedis, 219 million Ghana cedis for the period January to December 2024. In constant terms, that is discounting for the effect of price changes, GDP at constant terms was 197 billion Ghana cedis for the period January to December 2024, culminating in the economy growing by 5.7% in the year 2024. From a non-oil perspective, the economy grew by 6.0% in the year 2024. From an annual GDP perspective, similar to what we saw in the last quarter of 2024, from an annual GDP perspective, we saw a consolidation of the service sector accounting for 46.0% of the 1 trillion Ghana cedis that was recorded for the year 2024, followed by the industry sector 30.8% and the agriculture sector 22.2%.
All right, that was the government statistician addressing the press a while ago. We'll have more on that subsequently. But let's turn to the 2025 budget because Finance Minister Dr. Kassel Atuforsen has announced plans for significant allocations to the agri sector in the budget. However, he also revealed that the expenditure on interest payments is expected to rise considerably. The minister shared these insights during a social media engagement with the youth on X, formerly known as Twitter.
You'll be seeing some drop in primary expenditures because what we are seeking to do is to go through a very strong fiscal consolidation. You will see an increase in debt servicing because Ghana is resuming the payment of debt because in the past 2 years, the government of Ghana was not servicing some debt, particularly the Eurobond debt servicing and all. But we have just resumed the servicing of those debts. And so you'll see an increase in debt service obligation. If you adjust debt servicing and look at primary expenditures, you see some significant reduction as compared to the outturn of 2024. That one, you should expect to see that. And
the minister also revealed that some of the levies at the country's ports will be rationalized.
We believe that some of the taxes and some and levies in particular can be removed because it will surprise you to know that all these levies and taxes does not come straight to the central government. Some of the levies you see there are being, the benefits is not going straight to support the consolidated fund. And so we need to identify who are those benefiting from these levies and for what purpose. And then if there's the need for us to remove them, we will have to remove them. So there's a team that are working at the moment as we speak, and I'm sure in due course, and again in the budget, we'll hear some announcement.
The Finance Minister, Dr. Kassel Atuforsen, also suggesting that he will be targeting spending in areas that will aid growth whilst rolling out measures to aggressively reduce the debt stock. While still in the budget, planned cuts could target capital expenditure, non-essential and wasteful spending. According to sources familiar with the budget details, these areas are expected to bear the brunt of government's cost-cutting measures. Georgia has more on this story.
Joy Business understands that these cuts will target spending lines of the various ministries, departments and agencies that has been described as not so critical or non-essential. These cuts will also look at areas that government thinks that there hasn't been value for money, or let's say quality returns on investment. The Finance Minister would use the 2025 budget to give fine details on some of the issues that President John Mahama captured in the 2025 State of the Nation address to Parliament. When it comes to the economy, the budget would also outline measures aimed at rationalizing the current tax structure, while rolling out programs aimed at improving upon tax compliance. The budget will also outline measures that will target the revenue situation improving over a period than just in a year. The Finance Minister is expected to give some fine details on some proposed economic policy measures that he believes would help fast-track the growth of the economy, like the 24-hour economy program, and how he intends to finance this program for this year.
Well, we can now hear next from economist Dr. Priscilla Chumesi-Bafo, who has raised concerns about the potential impact on government on economic growth if the government proceeds with aggressive expenditure cuts in the upcoming budget. This follows revelations that Finance Minister Dr. Kassel Atuforsen plans to implement significant cuts to help manage rising debts. However, Dr. Balfour is particularly worried about the challenges of identifying where to make these cuts, given the structure and nature of Ghana's current budget.
The budget is a very rigid one in terms of the areas where government has the flexibility to, because when you look at compensation, statutory payments, and then interest payments, essentially government revenue is done. And so we are quite interested, and I am happy that the minister reviewed the true state of what the economy looks like. And so on the other hand, we are looking at in terms of the promises of cutting of taxes and removal, what the innovative ideas are with regards to what the solution will be presented.
And I will ask you that, where can we cut? Because the minister also threw that puzzle in his presentation about where can be cut, or the rigid nature of the budget.
Indeed, that's what I'm saying. There needs to be a lot of innovative thinking with regards to what can be done. So for interest burden on the budget, for example, he indicates that there have been some savings that's been made, and so in that angle, government borrowing needs to be checked. There is the need to check the growth of compensation, and that is where we need to consistently automate and digitalize the processes so that leakages. There are issues with regards to earmark and statutory payments where there are wastes. So I believe that these are the harder conversations that needs to be had for the decisions to be taken, really.
Well, meantime, businesses are hopeful that the planned tax cuts, including review of the e-levy, will support the country's economic recovery, whilst the proposed 24-hour economy is expected to generate much-needed jobs. Now, these insights were highlighted by over 200 businesses surveyed in KPMG's 2025 pre-budget survey. Here's more in this report.
KPMG notes that abolishing the e-levy and COVID-19 levy could result in a revenue shortfall of at least 6.4 billion Ghana cedis. Accordingly, some respondents in the survey also suggested the use of technology and reduction in government expenditure as key initiatives that can support in closing the shortfall. The firm also charged that for Ghana's 24-hour economy to succeed, it should focus on industries that naturally thrive with round-the-clock operations, increased consumer demand, and global market competitiveness such as manufacturing, among others.
Now, country managing partner at Financial Services Group Deloitte Ghana, Daniel Kojosu, has expressed concern over the potential economic impact of the proposed tax cuts. In light of Finance Minister Dr. Kasa Tuforsen's indication that taxes such as the e-levy and betting tax could be removed in the upcoming budget, also warned that government may need to implement alternative measures to address the revenue shortfall these cuts might create.
We know we have the Fiscal Responsibility Act, where it limits our over-expenditure to just about 5%. That has been codified into law. We don't comply with it. So now we need to generate revenue, internal revenue from taxes. How do you do that? It means that it's the citizens that have to pay the taxes. Now, even people who pay taxes, they are complaining that the taxes are a lot. Now we want to now say we need more, but we can still get more. Why is it that in other countries everybody will want to file their returns at the end of the year? Why? In Ghana, if you don't file your tax returns, no one even cares about it. My first policy, I would say, for the new government is that everyone should be able to file their return. Whether nil return, whether it's coming with any payment, let everybody file their return at a certain period, starting point. Now, once you have that data, then you know who are filing what. There are a lot of people doing a lot of things within the country where when they file their tax return, that's the only point you know what they file against what they are spending, and then you can then trace that. So the starting point, everybody should file their tax return. Second, we now have our national ID. Yeah, which is fantastic. Why can't we link it? So if you haven't filed your tax return, it should be recorded on your national ID, for example. we're not saying that when you go, it will not allow you to do services, but we are saying that it should be recorded. So when, for example, I give my card and I'm doing something, it should show that I filed my tax returns for the year. The rest of it is the hard work. How do we ensure that people disclose their incomes and their tax properly? Because people are doing a lot of things. So the revenue is very true. We need to do a lot of things, but I'm saying that there are some basic things that we have to start from. First thing, everyone will have to file their tax returns at the end of the year.
And that would help. But you see, there's also another school of thought and the argument that there's a same government that has highlighted the revenue gap, but again is trying to press ahead with doing away with e-levy, betting tax. Some are saying that a mid-year budget will offer you a better opportunity to really assess the situation, whether really these taxes should go or not. We know the political cost and the political economy. What are your thoughts on these things?
Okay, so that's where you come into the dichotomy between politics and running the economy. So you've made promise to the citizens that you are going to remove those taxes. But the problem you have to look at is that what is that taxes contributing? I think what is happening is that people have seen that when we introduce taxes and even the taxes become outdated. For example, we have COVID tax, we have energy recovery, we have so many of those taxes. For me, if we want the people to trust you, you have to tell them, these taxes I put in for this purpose. The purpose is no more, I take it off. So that the next time you come in to tell me, okay, there's this problem, we want to introduce a tax to solve it, I will trust you. So for me, I will support the government that those taxes that have become nuisance, those ones that were introduced,
like, I mean, this is your space. Your advice,
COVID levy, for example, it should go. Why not?
The betting tax should go.
The betting tax, you have to evaluate it. For example, how much does it generate? How much does it generate? If it's not generating enough, is there other ways by which we can generate that revenue? For me, if the aim was to prevent people from even doing betting, I'm telling you that has even cost a lot more. Now there are even fancy names that people even have for betting.
All right, and join us tomorrow for our coverage of 2025 budget presentation right here on this network. You're watching The Marketplace. We're taking a short break. We will be right back. Hello, welcome back to The Marketplace. Interesting developments on the money market. We want to report interest rates plummeted again as investor demand for treasury bills continue to rise. The auction results released by the Bank of Ghana show that government recorded a 79.61% oversubscription of bids. Head of Trading at Republic Securities, Patrick Edem Agama, joins me on Zoom. Patrick, interest rates going down further to 17%, unbelievable. Plus, investor demand for treasury bills continue to rise. Despite this, explain.
Good afternoon, Darrell. Yes, we are seeing that the liquidity on the market is drying up, but still we have seen great drops. 91-day clearing at 17.72%, 182-day 18.97%, and then the 1 year 19.98%. All of them trading even lower in the secondary market, and all of them below 20. It's a sign that, yes, the trend is continuing, but the liquidity is gradually drying up because of the interventions of the BOG.
Right. And so how did the market fare last Friday?
Well, so we saw that the government raised a total of 6.2 billion Ghana cedis against a target of 5.7 billion. Again, about 4.08 billion were rejected. And we've seen all the rates dropping below 20% this time.
Yeah, I mean, while we talk about the decline in interest rates and oversubscription of bids, how are these significant in the lead up to the budget presentation tomorrow? Plus, what would investors hope to hear from the finance minister once he makes that presentation?
Okay, so it's very clear to us what the finance ministry is trying to do with regards to trying to drop interest rate to the lowest minimum rate so that they can also make room for them to issue some notes. However, we are also looking at the ripple effect on the market. And now that the liquidity is drying up on the market, it will be interesting for us to see how this will go forward. We will be looking out for the policy directions with regards to revenue measures and those cuts that will happen tomorrow. We'll be eager to see how the government policies will come in to replace those measures that were taken at the previous time. So if this plays out, this will clearly define the direction of interest rate. We are also seeing that this week is going to be a real good test for government during the auction because they are targeting about 8.2 billion Ghana cedis. And now that we have liquidity drying up and new measures are coming in, we'll see how this will play out.
Yeah, it looks like everybody's waiting to hear what the cuts would be. But on the stock market, we've got our eyes on certain stocks, at least 4 of them. We expect share prices to rise this week as a result of rising investor demand. Tell us what you're reading.
Yes, we are seeing so much demand in Total, MTN, and CAR. As you are speaking, Total and CAR Bank are already jumping in some pesos. We've seen pressure mounting on stocks like ETI as well. Demand is rising, and this is expected to continue. Now, the composite index is trading above 23%. The financial stock index is also around to 21.35% year to date. It's interesting times, and there's no sign that this is going to slow down, but we will still see what happens after the budget.
All right, we'll be watching. Thank you so much, Patrick Edemagama, Head of Trade and Republic Securities. I appreciate your time with us here on the marketplace. Guys, there's more news on our website, myjoyonline.com/business. More on the provisional GDP figures released by the Ghana Statistical Service. Ghana's economy grows by 5.7% in 2024. Also, government to lose 6.4 billion Ghana cedis if it scraps electronic COVID-19 levies. That's according to a KPMG survey. myjoyonline.com/business. We leave you with our Money Lab episode for the day.
Welcome to Money Lab. My name is Abna Baini, and I'm an audit partner with Deloitte Ghana. So people often ask, what is an audit? Or where were the auditors when everything went wrong? Audit is basically an examination of financial records and documentation for an organization in order for the auditor to express an opinion on those financial statements or those records. This is done in line with the international auditing standards and the international financial reporting standards. So when something goes wrong, people ask, as I said, where were the auditors? We must remember that audit is based on risk, it's based on sampling, and it is not an investigation. Because it's based on sampling, it means that the auditor does not examine every single document. They work based on materiality. Materiality is a number beyond which the auditor is okay or not okay. It's a figure that will influence the entire financial statements. This has been today's session. Join us again on the next session of Money Lab.